Guys, 3 major stocks reported today: Microsoft, Meta, StarBucks. We're going to start off with Meta because Meta crushed $40.6 billion in revenue versus an estimate of $40.1 and $6.03 EPS versus $5.21. Beat on both, beat big, and look at this bad boy. Down $21 after the bell. I can't believe this. If you when we were first telling me these numbers, I was like, well, they're going to be up another 5 or 7%, and they're down. Incredible. Why? I mean, they just reported, so there's no guidance yet, I don't think. Is it because as people are exhausted and, okay, let's take our profits? And maybe. I have no idea. Remember, on this channel, we talk a lot about quarterly results, annual results, but we're trying to focus on using these as opportunities when people overreact. If you like Meta stock at $600, this is an opportunity for you. I'm not telling you should. I'm just saying if you like it at $600, you should like this. You want the stocks to go down. That's what we're trying to do on this channel. If this is your first time watching us, we do 3 or 4 videos a week reacting to the economy, market news, earnings, etc. So subscribe to the channel so you can watch all of these and pay attention because we've done a lot of videos this week. It's a busy earnings week. Meta is a great company with a great balance sheet, but let's pull up their quarterly report and see what they had to say. Guys, right from their website, look at this. Revenue up 19%. Cost of goods sold up only 14%. For an operating margin of 43% versus 40%. So their operating margin did go down. Did go down as a percentage here. You have net income here of $15.7 billion versus $11.5. Net income and EPS up 35 and 37% respectively. And the stock is currently down 2.6%. Guys, you never know what's going to happen. People could be, okay, we're all set here, we're done. Remember, this is a company that on November 4th, 2022 sold for $88 per share. In 2 years, it is up 7x. That's incredible. Not 7x, 6.5 times. That's a lot. It just goes to show what we're trying to do here, which is buy great companies at great prices and hold on to them as long as they're great companies. That's what we're trying to do. So guys, here's more Facebook data here. Family daily active people. How many people are active on their family of apps? 3.29 billion, an increase of 5% year over year. That's big, considering how big the company is. Ad impressions delivered across their apps increased 7%. Average price per ad up 11%. Revenue, 19%. We recapped the 14% here. Cash and cash equivalents. Boom, 70.9 billion and free cash flow is 15.5 billion. Long-term debt. Headcount, 72,404, an increase of 9% year over year. So some steady hiring for a company that's already pretty large. All started from Mark Zuckerberg's dorm room at Harvard. So that's pretty incredible. I love that daily active user numbers. Facebook, Instagram, Oculus, WhatsApp, all of these guys, they are crushing it. And this is after they're still making investments in the Meta. Let's go check that out. So here is the breakdown of the revenue and expenses and profit for Reality Labs versus family of apps. Reality Labs brought in $270 million in revenue versus $210 last year, and the 9 month was $1.063 billion versus $825. But look at these losses. For the 3 months, $4.4 billion versus $3.7 last year, $12.8 billion versus $11.5. So they still generated a ton of free cash flow, a ton of net income with this complete miss right here. So they shut this down tomorrow, what would happen to their profit? It'd go up $15 or $20 billion a year. That's what's important on Meta. There's still juice there. And that's assuming they don't continue to lose. They continue to lose money hand over fist over there. But their revenue is getting better. It's an investment for the long run. Let's pull up the next one. Let's go to Microsoft. Microsoft is up big the last time I checked. Oh, now it's not much. It's only up 1%. They reported $65.6 billion in revenue versus an estimate of $64.4 billion. $3.30 earnings per share versus $3.08 expected. About even. Nothing to write home about. $4.36 per share. All-time high is $4.68 on my birthday this year, July 5th. Send me a Venmo with next July 5th for a gift for me. So another great company at a great price. Another great company that crushed it. The question is, are they at a great price? Let's go pull up their quarterly report to see if anything big came in there. Guys, Microsoft's a huge company. And look at this first line. Revenue of $65.6 billion, increased 16%. Operating income, $30.6 billion, increased 14%. Net income, $24.7 billion, increased 11%. EPS up 10%. Guys, this is a company that's ginormous and they're growing at double digits still. This is incredible for them. Absolutely amazing. And of course, the very first line, AI-driven transformation is changing work artifacts, and workflow across every role, blah, 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 blah. Strong execution by our sales team and partners delivered a solid start to our fiscal year with Microsoft Cloud revenue of $39 billion, up 22% year over year. Big time growth though. Products and cloud services increased 13%. Consumer products and cloud services up 5%. LinkedIn revenue up 10%, probably because I'm on LinkedIn now. Probably increased their revenue. So guys, they crushed it. Let's go see how they're doing now. Are they in the positive still? They're still in the positive, up 1%, but not as much as you'd think after crushing like that. Now guys, final company, Starbucks. I own Starbucks. Don't own a company just because somebody on the internet has it. Learn how to buy companies at good prices. Starbucks missed on both revenue and profit. $9.07 billion versus $9.3 billion expected. Huge miss. 80 cents per share in profit versus $1.03. But surprisingly, guys, look at this. Meta's down more, and it missed. It hit both. Starbucks missed on both, and it's down less. Now, guys, I fully expect Starbucks. Oh, actually, Starbucks is still up a lot from... Still at $96 a share. I'm not a buyer of Starbucks at these prices, and I can get into that a little bit later, but Starbucks is going through a turnaround right now. And I think that the economy and the consumer is probably weaker than we think. I'm not saying it's weak. And what's the easy thing to cut out of your budget? Starbucks. Not bad. I look at this saying, hey, it might be a little bit of a turnaround. They just got that new CEO from Chipotle, and they skyrocketed from like $80 a share. I mean, their 52-week low is $71 a share. So they're still up a ton, almost 40% from their 52-week low. But remember, it's about buying these companies at a great price. Microsoft, Meta, Starbucks. Do you think these companies will be around 10 or 20 years from now? My guess is they will as well. So it's about buying it at the right price because they'll probably all be more profitable 10 or 20 years from now than today. So if you buy them at the right price, you can get a good return on the money that you have invested in those companies. And that's what we're trying to do on this channel. We're not trying to split the atom. I'm trying to keep investing as simple as possible. On our main channel, we talk a lot about, hey, this is how you evaluate. This is how you use the 8 pillars on these companies and our stock analyzer tool to determine the right price to pay for these companies. That's what's most important. And if you want to check out this stuff, everythingmoney.com/sign up. Go check out our software. If you're a member of our community already, do me a favor on Twitter. Give me your assumptions for Starbucks, Microsoft, or Meta. Tag me in it at EMPaulG. I'd love to see your assumptions for it. Thank you very much for your time.